Okay, welcome everybody to this evening's XAUUSD Securities webinar. My name is Duncan Cooper. So tonight's webinar is Forex Trading Live Market Analysis. That will be coming momentarily. Just to give you a heads up what's coming up from me this week. My webinars are running at 8 p.m. Sydney time, and tomorrow evening we're going to be doing a review of last month's price action, looking at the patterns that we're setting up last month. What can you learn from those? And then on Thursday we have more analysis, live Forex market review on Thursday 7th at 8 p.m. So that's what's coming up. Before we get into it, if you can read through the disclaimer, please, for those on our YouTube live stream. I cannot see the chat, but you're more than welcome to join us in the webinar. Just follow the link that I've given you. For those in the webinar, you can use the webinar chat or the question and answer box to talk to me. So I'll just give you a moment or two to read through the disclaimer. Keith, thank you. Yes, I had a nice holiday. I'm a little bit sunburnt still, recovering from a bit of burn, but yeah. All right, we'll move along. Should have given you enough time to read through that. I'm just finding my feet back in the market. I've been away a week. Now, if you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at XAUUSD Securities, and I'm a full-time Forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And you can connect me on our website, acy.com. Go to the Market News tab or our YouTube channel, XAUUSD Securities Australia. Or you can connect with me on Twitter and LinkedIn at those handles there, if you want to follow me. And XAUUSD Securities has their Telegram channel. If you want to get access to that, just contact Nathan.bray. I'll put his details in the chat now. If you want to get access to my chart layouts and templates for MT4, just contact Nathan too. He can organize that for you. So any questions to Nathan, he'll organize anything for you. There's his contact details. All right, so let's get into tonight's webinar. So we'll have a look at the news first of all. So as I say, I'm just coming back from holiday, so I don't have any positions open. So I'm just getting back into the throes of assessing the market, understanding what news items are coming out. I do know there's quite a heavy news week next week from the US CPI data coming out next week, and I think the FOMC statement. But this week into tomorrow, this is Queensland time, into tomorrow morning for the US with the ISM service PMI data coming out and the job openings. 1 in the morning for me. Tomorrow, 10:30 for Aussie GDP QQ. Of course, today we've had the cash rate and that didn't change. Into Wednesday evening, Bank of England Governor Bay speaks. And 11:15 p.m. for the US for ADP non-farm employment change figures coming out. And a volatile early Thursday morning for Canada, or Canadian crosses, I should say, from Canada, with their interest rate decision. Not expecting any change there. And you can take the time to look through this, but we do have the US job figures on Friday. So that's really the big one coming up for the week. And if you do spend some time looking at what's coming out over the next week and a half, we do have the US inflation figures coming out next week. If you come into there. So the market's going to be assessing the job figures on Friday. And then, of course, Tuesday CPI, PPI data, Wednesday, interest rate decision. Probably no change there, but all these big hurdles to get around and through. We do have the UK interest rate decision as well, and the Eurozone interest rate decision on Thursday. So a big week next week. Really, finishing off this week with the US job figures and then to a big week. All right. So I'm just catching up from what the market's been doing. I have no positions open, and I'm just waiting for something to set up that I like myself. I do note that on the dollar index, first thing to look at, We obviously had a month down in November, but we got down to the 62% retracement. And from the monthly scale, we have a higher top. So are we maybe going to be forming a higher bottom? I know data's been quite negative for the US dollar in terms of maybe they're not going to be raising any more interest rates. Maybe they're going to be cutting because their inflation figures are falling. But there's always two sides to the market. There's the other currency cross and what's going on with their economy too. So there is the potential that we could be forming a higher bottom over the next month or two to continue up. All right. Now, on the weekly scale, we've come down to 62% retracement of the range. And we're just this week having a week up and getting ourselves back above this weekly high here at 103.60. So we may well see this area becoming support through the week, and that may, of course, then help pairs to the US dollar move down, which some of them are looking just a little bit toppy in the short term. Now, the S&P 500, we are almost up to the highs of July 23. A little bit flat here. Of course, the market is waiting for data. First data is really the big data on Friday. Are we going to see, like we did last month, are we going to see poor job figures? And now we're going to see weaker inflation figures. That was the common theme last month. Is that going to come into this month? If it does, we will probably test this high, and then are we going to be moving on through? If the data is a little bit more positive for the US dollar, then we could top out here and put in a long-term almost double top up here. So it's not really the area to be a buyer. Maybe an area to look for a short if we can start change trend here on the S&P 500. So really, for me, I would need to start to see first of all maybe a move to a lower bottom, and can we see a lower top form? You may see some form of head and shoulder form here, but that's what I'll be looking for. If I was going to look to trade this, I'd be looking for a short if it starts to form. It's not forming yet. We still have a higher bottom, higher top. Well, we're at a very prominent sellers level of the market at the moment. All right, let's get into the euro dollar now. Just want to drop it down to the weekly chart because as I've been away, I was watching it on my phone while I was away day by day. And I could see that we came up to this weekly area here, 110.12. So around that 110 area has been resistance with an outside reversal week. So is that a significant topping point? Or maybe, if this fib range here that I've got drawn across that weekly range, we could be seeing as we head into the new year a move maybe down this way, because the trend on the weekly here on the euro dollar is definitely down. This is all corrective rally, so until proven different. So we are holding out the 62% area, a weekly resistance area at 110.12. And this 108.33 level is a weekly level and also a historical monthly level from over here. So we're just kind of sitting on that level at the moment. All right. So at the moment, we've had, what are we now? The 4 days down and an inside day at the moment. Really, we moved to a lower bottom. So I will be looking for, at the moment, some form of corrective rally for maybe the first lower top to form. So as I say, I'm just getting back. I don't want to be selling down here after the 4th day. In terms of maybe a shift of trend here at the moment, we could be starting to maybe see over the next few trading days, we may see this come back up, could come up to the 62 level. That's at 109.35. 109.29 is an area of old day chart resistance here. That would be a great area to watch over the next few days for a lower top to form. Can you get short if it starts to turn over? That's what I'd be looking for. All right. Looking like we may be having a change in trend there on the daily. Are we going to come up? We could come up higher to the 79% level with all these heavy data releases coming out over the next week and a bit. Don't be surprised to see it maybe come up to these higher levels and then maybe offer that lower top. All right. So that's what I'm going to just be watching for at the moment. Of course, to have a rally, there may be an intraday opportunity to get yourself long if we're heading that way. Price action at the moment, though, on an intraday basis, isn't showing the ability to get too high. We're kind of just touching the 79% retracement of the range forming for the day at the moment. So maybe 108.33 here. If we get a 50-minute close below 108.33, maybe we are heading back down for the day to challenge 108.100. You can look for your setup to maybe get short if we can get a close below 108.33, or we may come a bit further up. It's obviously holding here through the course of the day 3 times, at least here at the central pivot point. So we're going to need, if we are going to move up to those high levels that I was discussing, we probably need a reversal day to day. But we'll just have to wait and see what the day brings. At the moment, we could just fail at the central pivot point. Can you see your setup to sell and reverse back down from the central pivot point today? Euro yen. All right. What we are failing at, if you go to the monthly chart, is a very historical area of resistance from 1998, I think it is. 162.42, and you can see we're coming up close to the realms of the GFC highs for this pair. It's obviously been filling some imbalances that got formed back in 2007 through this area here. And we're having a month down. Still in an uptrend on the monthly chart, but we'll have to wait and see whether this is putting a significant top and reversal. Weekly trend still remains up, and we're just below weekly what could have been support at 159.75. And, you know, the weekly scale, we may well pull back to the 62% level this week. 158.03, and that is also weekly support. All right, that's what I'll be watching for at the moment on the euro yen. What happens down at 158.19 and 158.03? Does that offer support for the next leg up? All right. So the euro yen is a little bit different to the euro dollar. Euro dollar is in the downtrend on the weekly chart, but on the euro yen is in an uptrend. So to change trend on the weekly scale at the moment, it's going to need to break 154.42. So it's got some work to really change the trend. Yesterday trend is down, but we're coming into areas of support. You've got all these highs to the left here as well. It'd be worth putting in a last day chart high that got broken. The newest one that got formed and broken is there at 158.65. And we probably traded there today. So whilst weekly level would be great, we may not get down to the weekly level. So you can see the rejection down. 3 4-hour rejection candles here. So if we start to see a 4-hour reversal here, even this 4-hour candle here, if you were with me last month, we're using the 4-hour candle entry. On the next candle, if we break the high of this candle, that's going to confirm a reversal, and that may be all that you need from your own perspective to go, okay, I want to get long, put my stop below the low. We've definitely come down to supports. We've rejected down here 3 times, and we're also rejecting last month's low down here. So as we get down into a 4-hour chart, 159.05 was last month's low, often a very strong level of support and a reversal level. So we could be at support here to trade back up. So you can monitor the 4-hour chart to see if we do break the candle after on the next 4-hour candle forming after a reversal candle. Okay. At the moment, on the 50-minute scale, it's very similar to the euro dollar. It's getting back towards the central pivot point, fraction short of the 79% level of the range it's been forming today. So you wait to see what the 4-hour candle does. We may see a reversal, and if we move above the current 4-hour candle when the new one starts. It's going to be my time at 8 o'clock, so it's about an hour away, 45 minutes away. If we do get a 4-hour candle up from the current one, we may be heading up for the day. All right, euro pound. Now, when I last reviewed this, we were starting to fail up here at monthly resistance, 87.21, and putting this triple top in up here. It's overextending to the downside at the moment. And if you go to the monthly chart, it is coming down to monthly support. So it's actually failed at monthly resistance and it's traded down to support. That support is at 85.47. And we're probably heading back up towards 86.09 weekly resistance here. Trends are down, but we're a little bit stretched on the last candle last week. Heavy sell-off last week. Bit of an imbalance. They may be feeling at least on this candle here back up to weekly resistance at 86.09. So if we want to trade this pair, I'd just be watching to see if we can move back up to 86.09. If we get up to 86.09, just dropping down to a lower time frame and see what starts to happen in price action. Can you see a setup to trade down from weekly resistance to, we've got a fraction short of monthly support. So we're getting support just ahead. Are we going to hold at resistance now and a retest to then trade down this way? That's what I'll be watching on that. All right, getting the pound dollar. 62% retracement. So euro dollar on its weekly scale got a little bit higher, but this is just at the 62 area of this, I think it's about a 3-month decline. On this pair though, whilst that's at the 62 level of that range, on the monthly scale, we have a higher top, higher bottom. And on the weekly scale, we have a higher bottom, higher top. So it's a little bit different to what we're seeing on the euro dollar. We are notably at an area of weekly resistance. So, I mean, we could top out here. And, this range here that we're moving up within, we are at the 62% level. We could, put in a similar rundown like so. We are an area where the market could definitely put in a significant top. But as I was just commentating, the monthly trend is up and the weekly trend is up. But, this range here, as I just monitor ranges, we are at the 62 level. We are holding at weekly resistance. We're back below it, the day chart. And we're putting in a little bit of a minor lower top up here starting to form. All right, if we can break last week's low, it is going to emphasize, a reversal maybe. We'll have to wait and see how strong that can develop. As I discussed last month, we still have an imbalance here that hasn't been filled. So we could well be this month, in any event, coming down to fill this imbalance here. All right, and that we do fill it. That is a good 350 pips. So there's a potential that we're forming a lower top here. What I'll be watching for today, depending on what price wants to do, is I'd simply be watching the range of yesterday. 62 level overlaps with the weekly resistance at 126.79. Just move to the 15. Up here is where, I don't get involved in selling at the lower yesterday. I'm always looking for a rally. Can I see it turn over? And, sell a rally within the downtrend that we're seeing this week. There's a bit of an imbalance on the 15-minute chart here. There's whole imbalance here, but the top part of the imbalance is up here. So this may well come up to fill that today or this week. May not happen today, may happen tomorrow. And the area that I would be most interested in is that weekly resistance level, 62 level. So 126.77 to 79 would be the area that I would watch. Now, what I'm definitely noticing though on a number of pairs, as I've been going through them, is euro dollar, euro yen, pound dollar. We're not getting up to the central pivot point today at the moment. So whilst I'm looking at higher levels, maybe my levels can't be met today, and that's fine by me. But notably, a number of pairs are not getting above the central pivot point. So that's just telling you that there's US dollar strength here at the moment because we're not getting up to the central pivot. Yesterday, we pretty much topped at the central pivot point. I've said this in my pivot point lesson. If we're topping out and can only get to the central pivot point, then the next day expect maybe we can only get to the central pivot point. When we're not getting there, that's just showing strength, in this case, the downside. So we'll be monitoring up here, but maybe the next level, the first level to watch will be 126.49, the central pivot point, because right now we're not able to get there. When we got the US news coming out, which is early in the morning, where are we? The 5th into the 6th, 1 o'clock in my morning. We may get driven up to those levels. We'll just have to wait and see. I'll be asleep then in any event, so I'll have to catch it up in the morning. All right, so my thoughts on the pound dollar, pound yen. It's holding to the weekly chart. It's holding the weekly trend just. If we break this low, which is at 184.46, that's going to change the trend. We're not able to hold this weekly high, and we just got short of monthly resistance over the last couple of weeks over here. So very similar to the euro yen, we are at high points historically. It's not the same historical price point. This is just 2015. It was 1998 we were discussing on the euro yen, but we're in a similar historical price point where the market will know this is expensive from back in 2015. And we got a fraction short of that monthly high. So at the moment, the market's prepared to sell from that level, but we haven't had a change in the weekly trend yet. And on the daily, we're having about a 79% retracement here. So if you're interested in the pound yen, you can start to look. Last 2 days, we've tested that level, 185.36. That could be the area to watch for a reversal. Similar rejection that we're seeing on, back to the euro yen, that we're seeing on the euro yen on the 4-hour. So we may be seeing a 4-hour reversal on these on the euro yen and pound yen. So what does the 4-hour candle look like on the close come the end of the webinar? If you break that high, we could be seeing a reversal back up. You can see it's rejecting twice here at the 79% level. Early in the day, you could have been down here fishing down at the 79% level for a reversal. And, you know, getting along at 79, stop below the low of the day. And you could be at break even by now, waiting to see if it is, yes, going to reverse or not. So I'll just be, you know, if you like the pound yen at the moment in its position, do we break the high of the current 4-hour candle when the next one forms? Stop below the low. Are we reversing all the way back up to the higher last week? All right. All right, Aussie yen. Now, while I was away on holiday, I did see a formation, you know, up here. Don't know if it actually started to form just the week before, so Monday the 27th. So it was just happening on the 27th up here. We were coming up to furthermore, so to the monthly chart, furthermore retest this double top. And the question is, are we forming a double top up there, or are we going to trade through next year? That's the question. Weekly chart, you can see 3 weeks we were holding up there. As I was saying last week, we retested that area last week. Are we long-term reversing, or are we going to get some support maybe at this high this week? That's at 96.91. We're underneath it at the moment. So at the moment, the day chart is kind of showing a reversal from that monthly level. It's just putting a fractional lower top. And I'll be reviewing this in detail tomorrow, but we did maybe have a 79% retracement up here at the start of last week. And we've obviously moved down from that area. Now, was looking at the range of last week at the start of the week, and I could see we were up there at the 62% level, and we've traded down now to 162 extension. So I'd actually be watching now. I would go from that area to that low and start to wait for the next retracement back up. Okay, because based on last week's range, we're very now overextended. That fib range, last week's range, down to 162 extension. It's overextended. I expect a move back up within this range. Now, 97.66 to a day chart is this significant high here. It's a little bit short of the 79% level at 97.75, but that would be a great area this week now to watch for maybe the next lower top to form. And that's the day chart lower top there. So we could actually monitor two ranges. When what we actually get at the moment is the 62% level overlaps with the 79% level. So we have a larger range and then a smaller range. Both have 62 and 79% at the 97.74.75 level there. So there's lots going on there between 97.66 and 97.75 if we could have a rally. All right. And just to make things doubly clear, on the day chart, I'm using that range in the day chart, which I'm using on the 4-hour chart. Are we going to come up and put a further lower top? So that's lower top, lower bottom. We're going to come up and put a further lower top in. And then on the 4-hour, there's this range. I will be monitoring that range too. All right, so there's your overlap there. So as we're in a downtrend on the day chart and the 4-hour chart, I wouldn't be bothering about trying to trade up. I'll be waiting to see if I can get myself set up here. Okay, for a short. Aussie dollar. Weekly chart. We'll have a look at the monthly chart. All right, so we're in a downtrend on the monthly chart. There's your lower top, there's a lower bottom. We've had a 62% retracement, which is this range. All right, this week we're having a reversal week down at the moment. All right, and some, I might just tidy a couple of lines off here. If we're going to get some support to move higher at the moment, I move back to my weekly chart, it would be down here on these weekly highs. So I'm just going to tidy off some of my daily levels. These weekly highs here, we could simply move down to these weekly highs for support and then move higher if it really wanted to. But I don't know if anybody got short up here around the 62 area, but that was really the area to look for your short. All right, 62% of the monthly range. All right, so you did have the opportunity yesterday maybe to get in. But we may well need a rally because we're coming down just to a lower bottom just now. But as trends unfold, of course, they break a low if we're changing to a downtrend. Then they rally for the lower top to form, and then they go down. So at the moment, we're getting maybe close to a bottom area for a rally. So I would simply be monitoring. If I move to my 4-hour chart, I'd be monitoring this range, this movement down that we're having this week. Just broken below there. Now, if you're much more bullish, you don't care that we've just maybe held at the 62% level of the monthly range, and you think we're going much higher, maybe to the 79% level, this could be support here now for a move up. So you could actually be looking in this area for a reversal back up. If you're more bearish, so let's just take the bearish scenario. If you're more bearish, you want to be looking up here back at the 62% level of the monthly range, and you have a 79% level there too at 66.64. We could actually come up to last week's high if it really wanted to and put in a head and shoulder pattern, left shoulder head, right shoulder off there. So I would be looking up here for a rally and then a failure. If you're more bullish, you could be looking at the 15-minute chart at the moment, because we are on support, day chart support, for some form of reversal here, back to the upside. But again, if I see anything on a lot of these pairs at the moment, here's a central pivot point we cut. We haven't been anywhere near it today. That's just telling you that we're weak. So if you're more favoring the buy side, there's day support, 65.57. Sorry, 65, I think 70, 65.70. I'll just double check. 65.70, that is day support. So we could hold there, form a double bottom, trade up, or are we going to have a bounce here to put in a lower top? Because we're failing at 62 of the major range, I'm more inclined to think this is a top, and we could be moving down over time. So I would much prefer to monitor. Of course, to get up to the 62 or the 79% area up here, it has to reverse. So you could say, well, I want to trade it up for that movement up before looking for a short. So you can monitor down here for the opportunity to trade up at the moment. Now, if we don't really trade up today, something you can be watching tomorrow is the 66 level. You can see how we got a bit of support here and then suddenly went drop. This is probably when we had the interest rate decision. Yes, it was. So that's the interest rate decision drop. We may, trading today and then into tomorrow, we may only come up to 66 and hold. That's where we sold off from the interest rate decision. Okay, so whilst we may see a little bit of a cycle back up, 66 is the first level to watch to be resistance if it doesn't want to rally to any length. Okay. All right, New Zealand yen. Let's have a look at the monthly chart. Similar to the euro yen, pound yen. All right, we're at some historical high area here, or close to, but it is holding to its uptrend. For a good year and a half, it hasn't been the best trading pair. It's been rather sideways. It has managed to break above this area in the last few months. Trend on the weekly is up, and we're bouncing off a weekly high here. So I just want to put in a fib from, well, there's a bit of a minor low here, so I might just use that low at the moment. Just see where price is positioning itself. I don't really like this pair at the moment, just the way it's positioned, and it's at this resistance up here. It's kind of stuck between resistance. So I just need to double check at the monthly level. These are just weekly levels here at the moment. So on the weekly chart, back to, there's a monthly level over here. I'm just trying to get my bearings of where I'm getting that line from back in time. All right. They're just daily high points. So that fib isn't really helping me anything. So at the moment, we're really stuck between weekly support, 90.19, and then we've got two daily highs up here, 91.19 and 91.02. So stuck a little bit between almost 90 and 91. So this is support. So if you were watching this earlier in the day, you could have been down here fishing for maybe a long. You have to be very mindful of maybe we're getting support at 90 or 90.19. But resistance is coming in at 91. So we're in a 100 pip range here. So it's not the best pair at the moment. So I'd probably look at something different. But you can see all these 4-hour lows here. So, if we get a 4-hour rejection candle, trading the break of that rejection candle could then see this move up to test the day chart resistance levels. And we could be coming back up to challenge the high of last month. So there's the potential for this to move back up the range here. You know, we've been selling off on, yen has been getting stronger over, certainly about while I've been away. And in the last week when I was here, yen's been getting stronger. US dollar was getting weaker, but maybe that US dollar is just starting to put in an interim bottom. And if it is, the dollar yen's going to start to move back up, and we're going to start to see some more yen weakness. So with this New Zealand yen, maybe all you need to see is a 4-hour rejection down here on support, and then we could be trading back up to at least test the high last week, because I've got my last week's low here at 90.15, which is, just want to double check the level. It's actually 90.27. So it is that low. That's last week's low. So we're not able to break last week's low, even though we're trading down. Just getting my line back in. All right, so we haven't been able to break last week's low, so maybe we're not going to have a down week this week, and we're going to trade all the way back up to retest the higher last week. So we're trading all the way down, almost to the bottom of the range for last week. We could trade all the way back up to the top of the previous week, and also last month's high up here. So fishing down here, do we get a 4-hour reversal? Does it break the candle? Maybe to trade all the way back up the range of last week for the New Zealand yen. New Zealand dollar. We go to the monthly chart, very similar to the Aussie dollar. There's your lower top, lower bottom. Kind of at the 62 area, slightly underneath at the moment. And we're holding out. I saw this as I was just getting myself back into the routine, looking at charts on Monday. Back up to monthly resistance over here at 62.04. So when I've been on holiday, I don't normally just jump on my charts the first day back and just trade, because I want to get comfortable with the levels that the market's been respecting. I didn't really look at the market too much last week, but I was very aware of 62.04. So on the weekly, very similar to the Aussie dollar, back up to the 62 area of this range, the monthly range. We are holding at the monthly resistance level, and you can see yesterday's reversal. I was actually itching up here to have a go at shorting this, but I just had to, it was my first day back at trading. I'm usually more on the less aggressive side. So I thought I'll wait for this to maybe sell down and maybe rally on the 4-hour chart. So at the moment, 62.04 is monthly resistance. We're just starting to trade below the 62 level today. Hasn't actually changed its trend on the 4-hour chart. So whilst we're getting selling pressure at a notable area, last month's high, last week's high, monthly resistance, it hasn't yet changed the 4-hour trend structure, but I don't really care about that. I could still watch this range that's been forming from yesterday and look to see, so the 79% level is overlapping with the monthly high of last month. So 62.04 is, well, the 79% level is at 62.04, and that's your monthly resistance level. So if we could get back to that area, and assuming that the US job figures doesn't bring any US dollar weakness, maybe it comes in on print or it's a little bit nicer than last month, maybe we're going to have a top out. All right, so I'm a bit cautious about Friday's data at the moment, but if we could get up there maybe tomorrow and hold, you have a good 24 to 36 hours maybe of time for that to reverse down ahead of the Friday's job figures. Okay, so twice it's failed there. So it is proving to be a resistance here at the moment. I'll be looking up there if it can retest. What we could also see, if we can break into a downtrend, we could see a 4-hour chart head and shoulder pattern, left shoulder, head, right shoulder form as well. So depending on what price does and where it sits right now, I'm just going to assume it's going to hold there at the moment. I will be watching up there, but depends how price unfolds over the next 12 hours or so. But if we keep moving down, I'll just keep moving the fib down and still wait for the rally to occur. And maybe I'm going to be looking up here on Friday for a rejection after the job figures. We'll have to wait and see how price develops. All right, dollar Canadian. I've already got a little bit of things set up here. You know, the weekly trend is holding to up. Let me just get that fib off. It depends what scale is going to hold the trend here, because the monthly chart, maybe we've got a double top. On the weekly chart, we have an uptrend. This is just a pullback within this range. So sometimes trying to determine the long-term trend isn't always that easy, but the weekly trend has pulled back to the 79% level. We're putting in a higher bottom here. Are we seeing that US dollar strength coming back in? And we did have a reversal yesterday, and we're broken above the reversal candle of yesterday, today. So it's starting to maybe confirm a reversal if you wanted to get long, just breaking above yesterday's high, stop below yesterday's low. Or you could be looking at, for a trend that is just turning up, you could be trying to fish at low levels. Can you see, assuming that's the high, can you see a 79% retracement on the 4-hour chart to then trade up? Are we putting in a weekly bottom here at the 79% level of the weekly range? All right, so if you look if you like the dollar CAD, 4-hour trends turned up. Will it provide you a 79% retracement for then a continued move up this week? Of course, we've got the Canadian interest rate decision coming out on Thursday, early Thursday. So there's a little bit dicey trading that pair at the moment if you're trying to hold a position, but it could re-stab down to the 79% level on Thursday and hold. And if it does, then maybe we are putting a bottom there on the weekly chart at the 79% level to move up. So it's worth monitoring to see what happens after the interest rate decision, what happens down here. At the largest 79% level at 134.90, maybe the 135 level. So through the week, 135.100 area approximate could be strong support. We actually false broke last week's low. All right, and then traded up. So we could be trading all the way back up within the range of last week, or maybe having a week up. That's last week's high up here at 136.60. Right, so I'd be monitoring price action maybe to look kind of like that. Can it unfold? Can you see a setup down here on a lower time frame to get in? Dollar franc. Now, whilst this is in a monthly downtrend, we're at monthly support over here, 86.99, so approximately the 87 level. And yes, we have a lower top, lower bottom. So down to a lower bottom, lower top, but we could put a high bottom in here on monthly support. And what I did notice as I was looking at my charts is this range here, 79% level. So at the 8700 area. Now the day chart trend is down, so you'd have to be, you're definitely going counter trend here, fishing down here. But after the job figures this week, if we are still holding down 8700 and we're starting to maybe want to reverse back up, maybe we are putting in an interim bottom here to maybe trade back up. All right. So that's the area I'll be watching for support. The day chart trend though is down, so there's another fib range you could be monitoring. Is just this simple range here that's been formed from the last lower top. And you could just be monitoring, I'd then be monitoring, what happens up at 88.29, the 79% level. Does price come up to that area, and then do we continue the downtrend? All right. So in terms of being short, it's overextended. So this is not the area to get short. But if we just rallied and then held at the 79% level, we could form a lower top on the day chart for further downtrend. So depends how aggressive you want to be. If you want to be really aggressive, maybe you could fish for a bottom down there at the 79% level of, this range. So let me put the fib on there. So, it's all dependent on the US dollar coming out over the next week now for this pair. Is it going to be more US dollar weakness, or do we put a little bit of a bottoming down here at that 79% level? What I can also see here, just eyeballing, is a bit of a equal range. There's a range there. Then we've had a rally. And then there's the next leg down, which is fractionally longer. But we might be getting ready for at least, we've kind of had a move down, the next move down. We've had this rally here. So of course, this move down here is a little bit longer. But we could be there looking for at least the next rally back up. And that comes up to 88, 87, which is this resistance level here. So that move up there could get mirrored up this way. That's what I'd generally be. That's kind of how it looks to me at the moment, but we'll have to wait and see what the data brings. All right, dollar yen. Now, again, with the US dollar, we'll have to see what it brings, but simply from the weekly chart or even the monthly chart here, double top, is it or isn't it? We're having 2 months down from that level now. Not 2 months in time, but 2 candles down. So are we forming a major reversal here, or is it just an interim top? We have actually changed the weekly trend to down, or broken that weekly low there. So at the moment, what I'd like to see is maybe from a weekly chart perspective, and this could take the majority of the month to happen, because we've changed the trend to down, is the weekly chart needs to rally back up and put in a lower top. If we're going to get a long-term reversal, let's say this is a major top, and next year we're trading down all year from this major double top, then what should happen is the weekly chart should have a rally and put in a lower top. So to the day chart. So let's just assume that's the bottom at the moment. But if it's not, I'd keep moving that down. I would start to get set on this pair to look for the opportunity for a weekly rally. So we're going to need a week up. And can we come up maybe back up to 150.15? That's weekly resistance here, in between the 62 and 79% level. And then do we start to see a failure up there for maybe a long-term weekly lower top to form? And then now we're going to see a long-term decline. Now, of course, if we get a long-term decline in the dollar yen, we may be seeing that long-term decline coming in on the Aussie yen, where we've got that monthly chart double top as well. So we'll have to wait and see what the US dollar brings over the next week and a bit as we're getting towards Christmas. And maybe into the new year, we may see a lower top forming up there. So on this pair, that's what I think I'll be watching for, is over the next few weeks, can we see a lower top maybe develop for a move down into the new year? We'll have to wait and see. All right, let's get into gold. I was going to wrap up on gold tonight. Well, I don't trade gold, but we definitely have tested a major area. Last time we tested this area, so I've got an area of resistance here, but this high here at 2074, we only just traded above it to 2079. Yesterday, we did quite clearly go up to 2190. So the question would be, do we come up for a retest and a failure, or the fact that we moved so far above here, has that just cleared out a load of orders, then rejected? And is it going to get ready to move much higher above there, this month into next year? So the weekly trend is up. Right, so if you're on the buy side, you want to be monitoring this weekly range. And we are right now sitting at 62 level. It could pull back to weekly support at 2009. So we could maybe pull back to 2000. So I think if that clear, strong move yesterday above there for a while, above those highs, if we're going to have a long-term move up, we probably don't want to see gold move back below 2000. All right. So if you move back below 2000, we're probably dealing with a reversal. If we can hold above 2000, maybe we're just going to see a pullback before the market has another go at trading through these highs and then starting to be able to hold above the highs. All right. Because if we can't hold above these highs, we're always potentially dealing with some form of reversal. I mean, that's not a very inviting candle for the buyers at the moment. It's maybe more inviting for the sellers. So if you're on the sell side, I think it's very difficult to trade once you've just had a very negative candle like that. That's a massive candle for gold. I mean, that candle there is almost the range here. So it's highly volatile and dangerous at the moment trading gold, but we're looking maybe to come up to retest this monthly resistance here with the monthly highs that was at 2070 to 2079. That would be the area to watch for a retest and failure. So 2070 to 2079. If the market wants to offer that and move back up there. To the upside, what happens down here? 2009 weekly support. All right. Those are the two areas that I would watch. And of course, the geopolitical landscape with Israel is one of the factors that's going on here at the moment. We've had the ceasefire, then we don't. And we no longer have that, I don't think, at the moment. I haven't been keeping too much abreast of that because I wasn't watching the news last week. But what further geopolitical negativity is going to be coming out from the Israeli war at the moment? So those are two levels to watch. If you're game enough to have a go trading gold, you could be breaking it down to the 4-hour chart. And, if you see a rejection up from the 62% level, because you can see where prices traded, obviously we had 4-hour support here last week, traded up. We traded back below here, but you can see we're starting to maybe deal in this area. So over the next couple of days or even day, we start to hold here. We could start to see a base maybe forming in this area on top of the 62% level at 2030 for the next move up. All right, so whatever your setup is, if you're looking to the long side, what is your setup to buy? 2030 area could be where support starts to come in, but I would much prefer to see what happens down at 2009, the weekly high down here. All right, so those are levels to watch on gold. Anybody in gold? Anybody been trading gold? I see. You want me to look at oil? Actual trend on oil is up from the monthly scale. All right. We could actually come down to this support level at 70.25. Could form a inverse head and shoulder pattern here down at 725. So the monthly trend is up, but what we are seeing on the weekly trend, it is down. So, if we are bottoming out down here, you probably want to see the day chart prove that. And it tried to go to the upside, but now it's moved to the downside. It's put in a high bottom, higher top, and then move to a lower bottom. So it's not that easy at the moment. I could see why in this area we could consolidate, a bit like we did over here before moving long-term higher. So we could see some consolidation here because we are in the 62 to 79% area of the monthly range. So this area here Go back to the monthly chart. It's this area here. Back to today. If this area starts to hold, I mean, the day chart trend has turned back to down, which makes it difficult in this area, but we are in a significant area of support. And as well, if I show you where the range was, the general range of consolidation before the next move, the top of the range was approximately here. It's kind of there. That was kind of the range, and it became support to the top to move higher. So these lows coming in here are all coming in where we consolidated before moving higher. So we're back to where the accumulation started. So we may well see over the next few weeks some accumulation, I think, occurring from where we accumulated last time before the market moved higher. And of course, this would be a fractionally higher area, putting in a higher bottom maybe on the monthly chart. All right, so so are we going to be putting in a long-term bottom in here? I don't know what you're looking at there, Azu, from your perspective. Don't know whether you're looking for a long or a short. Of course, the day chart at the moment over the last 3 trading days has turned back to down, but I can see from the monthly chart, we are in an area where buying could start and a bottom could form. All right. You know, this is where the Israeli war started, and people were saying oil, oil's going to $100, and quite clearly that hasn't happened. So, but we are back into maybe the consolidation area for oil to go higher from this area. But if you want to get long, it would be quite nice if it could come back down and form an exact double bottom here. So we get a candle coming down to this low. So we get equal lows, and then do we get a candle trading up the next day, which would then confirm a double bottom. So if we formed a double bottom down here, which we don't have at the moment, then maybe that could be a signal to get long. All right. So you tell me that your long got stopped out. So it's, with the geopolitical landscape, it's trying to go up, and then it's got, and then obviously the market's reacted to what's been happening early this week to the downside. So, but again, things can change in Israel over the next week, and we could bottom out down there. All right, so that's my thoughts on oil. All right, everybody, I'm going to wrap it up there. Tomorrow I'm going to be reviewing last month's price patterns. What can we learn from that to move forward in your trading? So if you'd like to join me, just head over to the webinar page and register your interests. So that'll be at 8 p.m. with me tomorrow. Nathan is on board tomorrow with his webinar, the Quick Start Trading Strategy. If you haven't seen that, you may be interested in that. He'll be coming in after me tomorrow. In fact, he's coming in tomorrow evening at 10 o'clock. I don't know whether that's correct, but I'll have to, usually he's directly after me, but it is saying 10 o'clock. Let me just have a look. 10 o'clock and 10 o'clock. Let me just check something. I'm just going to pause the screen a moment. All right. According to our Zoom account, it is registered at 10 p.m. So, all right, so 10 p.m. Sydney time. So I've got my webinar at 8 o'clock. That'll finish at 9 o'clock. And then an hour later, Nathan's coming in if you want to join him. Okay. Other than that, hopefully you got some levels that you can work with. The big question, as I'm just getting back to the market, is a top forming as we're heading towards the job figures and then heading into next week's CPI. We'll have to wait and see. So we'll review on Thursday again what the market's doing. Maybe we'll get a rally on some of those pairs to the US dollar, and maybe we can see a bit of a turnover happening. All right. Thanks, Keith. All right. Thanks, everybody. Look forward to seeing you next time.